the party, it's over. Did you think you could just keep running around with your underwear on your head forever? Being careless? Did you think there would be no consequences for your actions? Because there are. That's right. Don't apologize. I don't care if you're sorry that you haven't bought a house yet. One way or another, interest rates are gonna change, whether you're ready for it or not. I told you to buy a house. Welcome back, everyone. My name is Broker Gayane, associate broker and future Oscar nominee, and today we are discussing current events. Last week, the Fed announced that they were going to begin tapering their financial asset purchases. If you're wondering who the Fed is, basically it's these old dudes at the Federal Reserve. They just sit around in a circle and decide policies and figure out how much everything's going to cost. At the beginning of the pandemic, the Federal Reserve was putting a lot of money into the economy. They wanted to keep interest rates low so they could increase spending and investment. They did this by buying $120 billion worth of treasury and mortgage-backed securities. Mortgage-backed securities are basically a group of mortgages, traditional mortgages that you and I would have whenever we go buy a house. The bank sells this group of mortgages to an investment bank, gets all their money back, and the investment bank will be making the interest that you are paying on your mortgage. So in the beginning of the pandemic, the Federal Reserve is buying all these mortgage-backed securities. It's great, interest rates are low. However, with all the good comes the bad, which came inflation. You might have noticed that things are getting just a little bit too expensive these days. Well, part of the reason is because the government put too much money back into the economy, and now they need to reel it back and balance everything out. So they're doing this by cutting down on how much mortgage-backed securities they have. Why do you care? Why does this affect me? Because interest rates will probably go up. The less mortgage-backed securities, the higher the interest rate. $120 billion is a ton of money, right? So unless there's this major shock in the economy, what we can expect from cutting back on buying mortgage-backed securities is that interest rates will steadily rise. I don't think it'll be this huge crazy rise, but if it does go up 0.25%, that's about 15 to 20K less buying power than you have today right now with the current interest rates. And if it goes up 0.5%, that's almost 40K less buying power, which is insane. That's a whole nother. It is crazy to think about how much power these old squares have, but this could really be the making or breaking point of whether or not you can buy a house. So if you're trying to get ahead of the game, let's make some moves. Be sure to check out brokergayane.com for more information. There is a buyer, seller, and investor inquiry section where you can just fill out that form and let's chat about how we can make some moves. Until then, my name is Broker Gayane, associate broker here in the colorful Colorado. I will be here every Wednesday with a brand new episode, and be sure to check me out on Instagram, LinkedIn, Facebook at Broker Gayane. I'll be all around. Take care, everyone.